The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
Good afternoon there, Octo Nation. It's Charlie. I'm going to be your host for today. Today we're taking a look at the top 5 farming stocks. First, I'm going to prove the point of why we need them, and then we're going to take a look at a lot of them. We've got a lot, all over the spectrum. I've done a ton of research on this. I've known about a bunch of these for a long time. A couple are actually kind of new to me, so I'm kind of excited to tell you about them, but I think we've got some cool plays here. Not necessarily ones to jump in right this second, as always, but something to definitely be aware of. If you find a good entry, it might be something you might be interested in, so let's dive on in. So the grocers, distributors, and their vendors were down hard on Friday because the Wall Street Journal article on Friday saying that August sales are down because $600 bumps ran out. The data continues to show that isn't the case. The IRI just updated their data this week, ending 8/23, and it was another plus 17% for the week in edibles in the grocery channel. Hang on tough. So what does this mean? You know, people like the Wall Street Journal will just come out and put a random article saying, food is down. Usually it's because someone pays them to say that. Okay, a lot of those writers, they will never admit it, but they take thousands of dollars from people to write one article for the Wall Street Journal. I can get you on the Wall Street Journal. It's only gonna cost you like $2,000, and that's just not even for a mainstream article. That's just kind of a backstreet one. You know, the bigger ones are gonna cost you another zero on there. Okay, at least 10. Okay? Keep all that in mind. Key highlights for this week. This was like a month ago, but I've been working on this for a while, so here we go. Still holds the same. The total CPG demand remains at 8% above year-ago levels for the third consecutive week, while demand for the total non-edible and fresh foods department remains static versus prior week. Total edibles saw a 2% growth. Quarantine baking is producing strong growth in the baking category. Demand for baking products has remained at least 20% above year-ago levels since the beginning of June. For 6 straight weeks, office and school supplies demand has fallen, of course, below year-ago levels, revealing the impact of remote learning and working. Fruits and vegetables are on the menu more often than last year, each producing 7% and 14% growth, respectively. The produce department is up a total of 10% versus a year ago. And here's this chart right here. It just basically shows the greener stuff gets, the more people are using it. All right, and so this is total edibles, beverages, frozen food, refrigerated. Tobacco is the only one that's actually kind of been going down. Isn't that kind of crazy? I thought tobacco use would be going up, but ever since all this started kind of happening, even since beginning of July, tobacco went down, which is kind of odd to me. Deli prep, this is going down for sure. So deli prep, what does that mean? That means if a company takes a bunch of fruit and they cut it up for you, and then they get it like a deli tray, have you ever been to a party where someone just goes and buys a tray of fruit or vegetables? That has gone down, and I understand why. It's because people are thinking someone's coughed on it and they don't want something that someone's already coughed on. They can't wash it, because the fruit or the vegetable is already exposed. So I can understand why that is down. But across the board, everything, deli prep meat, is down too. But other than that, oddly, I thought this was kind of weird that seafood has been spiking ever since this happened. So I don't know if people are getting appetites for seafood for some reason. What's up with that? Can anyone correlate that with what's happened since March? It's kind of crazy, right? I don't know. Am I missing something? The farm and land. This first one here is a total speculation play. This is one I have talked about before. This is called Colonnade Acquisition Corp. This is a unit right now. You can currently get a common share, and it comes with a half of a warrant. If you don't know what those are, just look at my videos. I've got plenty of ones explaining the difference between the units, the commons, and the warrants. Please look those up if you don't know. What this is this is a new acquisition company. They're a SPAC. They are looking for a new company to bring to the stock market. Now, what intrigued me is they were saying they were looking at stuff possibly in the agricultural industries, natural resources, energy, real estate, okay? And then when I started doing some research, the CEO dude, Mr. Trefelet, is the owner and operator of Mercer Mill Plantation, one of Georgia's largest pecan producers. So this guy, the CEO, he actually has he's got a big banking job downtown New York, but he's also got himself a pecan farm. He is also one of the biggest owners of this company right here, Alico Citrus, the country's largest citrus producer. And so that leads us into our second one, Alico Citrus. I like this play. This is a Florida mostly based prime asset, 110,000 over acres of land that they own. They've got citrus. They've also got 35,000 acres of dispersed water storage as a project they've got. These guys are cool. So this is Florida's citrus industry initiated a limited digital advertising campaign in November 2019 to promote orange juice. Okay, so not from concentrate. So even Florida helps out the growers there. So they're actually doing national campaigns saying, don't buy the fake Tang stuff, buy the real juice, get the real drink. Okay, the real drink's the best drink. These are the biggest providers for Tropicana orange juice. Y'all had Tropicana orange juice or just Tang? Or just Kool-Aid? Tropicana is their biggest buyer. These guys are absolutely massive. They've got over 45,000 citrus acres. Their profits are up. You can see they are going up. Annual dividend per share is skyrocketed by 35%. These guys pay dividend. Most of the ones we're talking about today pay dividends. So it's just kind of like the longer holds. They're not, going to 2x overnight like a lot of the ones we talk about. They could. Find out oranges cure cancer or something, maybe. But other than that, these are kind of slower growthers, but, they're growing for sure. And so are the dividends, so that's cool. 28% reduction in long-term debt since year 2015, which is fantastic. So they're paying off debt. They operate two business segments, Alico Citrus and then the Alico Water Resource and Operations. So not only do they have water on this side of the spectrum, but they have also got oil and gas and mineral rights in Florida. So I think they've got, I don't know what kind of mineral they got over there, but I don't know, what do you guys mine over there in Florida? And you know it could exist over there. So it's cool. You kind of get a double play with this. I mean, I think investing in water is one of the coolest things you can invest in. I know the Bush family, y'all heard of the Bushes from Texas? They dropped a lot of their oil holdings, I don't know, 20 or 30 years ago, and they started buying up stuff in South America a long time ago. Why? Water. So they started investing in water. They even started getting acreage in Texas that had water versus oil, because they see the big macro long-term picture that eventually oil won't be needed as much and water is always going to be needed, and it's always going to be a depleted asset. Alico Citrus today, you can see they're kind of all over Florida. I know we got some Florida people in the audience. Y'all represent out there. Orlando, Miami, where you at? Polk County, Lakeland, DeSano County, Charlotte, Glades, Hendry County, basically all down the center. It's a great place to grow. It's one of the largest citrus growers in the U.S. with over 45,000. Let's talk about that. Why invest in them? OJ is a $29 billion global market. Did you know that? That's huge. These guys have been on the NASDAQ since 1970. Yeah, that's insane. Recent real estate activity. The sale of two sections of East Ranch were approximately 1,250 acres, part of a new transaction they're trying to do. Strategic supplier to number one brand to Tropicana. So Tropicana has 89% of the revenue to them. So it's crazy. So they can clutch on them, So these guys they're basically trying to move up. What they've done is they sold some acreage, okay? And they're getting rid of stuff that's not really making financial sense, which is good. So they're moving forward, but they're also planting more trees and acquiring more different land. So however they're figuring it out, they're like, we're gonna sell this piece over here, 1,000 acres. They actually just sold to Florida. The state of Florida just bought some acreage from them. I don't know why. Millions of dollars. And then they're actually saying they're gonna take that money and try to get something else, try to get some more acreage and all that. But they're planting a ton of trees. So in the past, 3 years, they've planted 1.3 million new trees, orange trees. So this is what I was talking about, how they just sold the acreage. We continue to sell off part of the ranch, generate some cash flow, used in a manner that's targeted to allow for greater return for our investments. In connection with addressing the proceeds from the latest sale, we're evaluating several options, including strategic acquisitions, so buying new stuff, increasing our common share dividend, so they're increasing the dividend even more, even though it went up 50% last year, and or selected land acquisitions where we potentially can take advantage of a like-kind exchange structure, which would allow us to defer a portion of the taxes related to the gain of this land of the state. So they're just being smart with their money. Okay, they're looking at the tax side of it too. So this just came out like Friday. People are either going to take it good or bad. Usually in this stock market we're in now, any news, whether it's good or bad, stuff either tanks or goes up, and it doesn't even matter if it's good or bad. So anytime news comes out like this, I just sit back. All right, just sit back and wait a couple days and see what happens, because this could go down a little bit, which is good because then we can get in a little bit lower. This is a company that's not going anywhere, I don't think, unless they find out oranges do cause cancer. We'd be screwed, right? But you can take a look at the chart here. I mean, after March, it hit all the way down to like 24-ish, $23. And it's only up to 30 now. Before that, it was all the way up to like $58. So it's still got 2x to run to get where it was before all this happened. So, again, it's not too exciting of a chart, but for food, it's not bad. It's had these 2x swings, every year or two. So that's pretty good. Something you could park some money in and probably be fine. The other good thing about a lot of these is there's a lot of big money institutional and like family owned investors and stuff in them. So when stuff like March happens, or when the next March happens, which is probably worse, it'll go down, but it really still didn't go down as much as a lot will. Okay, ones that are just all retail buyers in there, that'll just go to zero. This thing is never going to go to zero, right? Maybe back to 20, I'd see 16-ish maybe, but who knows. Regardless, the next one we're going to take a look at is Gladstone Land Corporation. Ticker on that is LAND. Ticker for United States is LAND. Always check, type in the name. They've got 3 areas of farming. We believe that farmland growing fresh produce, example, fruits and vegetables, and certain permanent crops, blueberries and nuts, is a superior investment over land growing commodity crops, example, corn, wheat, and soy. So these guys are focused on land acquisition and expensive money-making farms. I like this. So they're not going out and just trying to get the corn stuff where you get like a penny for an acre or whatever. They get the expensive stuff, and try to own the land. These guys are rad. Territory of focus, they got high profitability in rental income, lower price volatility, lower government dependency, it's lower storage costs, ground typically closer to major urban populations, thus higher development potential. U.S. farmland decreasing and supply, decreasing supply, increasing demand. So demand keeps going up. Don't believe me, we got plenty of years here. Everything is just going up. This is actually showing U.S. farm. I like this. U.S. farmland has experienced stronger returns and lower volatility than both the MSCI U.S. REIT and index and the S&P 500. So this is showing. I think the MSCI. I think that's just like normal overall REITs or something like that. But this is showing that this has actually got a 13.6% return, where the MSCI US REIT, let me know down in the comments if you know exactly what that is. I forgot to look it up. Has an average of 9.6%. So this has got like about a 4% better return than even that REIT. The farmland is going to keep going up. People are going to keep buying it more. People are staying home more. Farmland market opportunity, annual fresh produce, primary focus, short-lived row crops, generally planted annually. Beans, blackberries, cabbage, cantaloupe, celery, lettuce, melons, peas, peppers, down the line. Just everything. Billions and billions of dollars of growth. Adequate and clean water supply with fertile soil and rich nutrients, excellent weather. They buy places that are in good weather, they got water. And 2, they're not dependent on, these kind of crops, they're not dependent on rain. So a lot of crops are dependent on rain. These guys are. So they're in places that have a lot of water that are set up to water consistently through irrigation. So what does that mean? If there's a drought in some of the areas that require rain for it to grow, these guys are still going to be good. I really like this farm play a lot. You've got water access, price volatility isn't as crazy for them. It keeps going up. Government dependency, commodity crops have often depend on government subsidies and tariffs for protection that are subject to change. Storage, there are added costs to dry and store commodity crops, whereas fresh produce is usually consumed within days. Yeah, so you don't have to like store it, it's in and out. The second they pick those berries, it's out. Fresh produce continues to outpace inflation. This was interesting to me. So, inflation, there's two gauges of inflation. There's two ways they calculate it. They've got one from like the 1980s and before, and then they've got the modern one. The modern one includes weird stuff that I don't think should be included, such as like window coverings. Okay, so the price of window coverings is in the CPI right now. So I like to base my theses on the 1980 pre-CPI measuring index. Okay, but regardless, some of these, let's just call them like high-end vegetables or fruits, are considered luxury items that are now included in that new CPI. But regardless, even against the new CPI and inflation categories, they have outpaced them substantially. How much? It looks like about maybe 30% more, 35% more. So what does that mean? The fresh produce is getting more and more and more expensive, outpacing even all the other stuff that's in the regular inflation index. So that's good. That just means it's going to get more and more expensive to farm the expensive stuff. These guys are all over. They're all over the United States. They're all over the places that, the coast that got the water in the central states here, where there's tons of farming. Everyone's known for farming. 86% of farms are family owned, 14% are institutional owned. Total U.S. farmland value is approximately $2.7 trillion. Approximately 62% of U.S. farm operators are over 55 years of age, and the average age is 58 years old. 40% of all U.S. farm acreage is leased to and operated by non-owners. We target family-owned farms. Target purchase price $2 to $50 million, relatively small for most institutions. Offer sale leaseback opportunities to allow the seller to continue farming the land. Able to offer shares of our operating partnership to allow for a tax-free exchange. So these guys are cool. They don't go in and try to buy half of Oklahoma. Okay, they're going into little mom and pops that need a little bit of help. Tractors broke down, they can't keep up on it, they had a bad crop year, and yada yada. These guys are going to step in and say, well, here's a little bit of money, just give us a percent, and they help them remodel the place, help them get the new tractors, whatever they got to get. So and they're continually growing. These guys are aggressive, buying new places. Since our IPO in 2013, we had purchased over $850 million worth of new farm assets. Continue to buy. This just came out last Friday. Maybe it was even closer. Maybe it was I don't know, maybe Wednesday or something. Gladstone Land acquires pistachio orchard and organic farmland for $31.8 million. 2,515 gross acres of farmland in Fresno County, California. Anyone in Fresno out there? Central Valley? Huh? For $31.8, and entered into an 8-year triple net leaseback agreement with the seller. And again, the deals they make with people are all over the place, but it's cool because they're adapting to the environment. They're doing what it's going to take to get the deal done because they want their hand in the farms. The farm consists of 619 planted acres of mature pistachio trees, 1,896 acres of open farmland, 1,273 acres of which is organic. Huge, man. I would love to own this whole thing, personally. And then September 1st, which was 11 days ago, they added land for $7.4 million in Maryland's East Shore district in Delaware. I thought this was kind of neat. They even got sod there. You all know what sod is? It's basically grass. You can buy grass with dirt already attached. It's already grown. So if you're building a house or you want to get rid of your rocks, you put in grass. You get the sod and just lay it out. So they got a sod farm, they got vegetables there, they got a 10-year lease agreement with a large sod vegetable grower in the region. That's going to put them in 12 different states and 25 different regions. We hope to be able to take advantage of certain of these opportunities to increase the overall diversification within the list of farms owned by the company, says David Gladstone, President CEO. Pretty neat, huh? I thought this comment was right on the money. He said, I know nothing about farming yet, but found this very interesting and commonsensical. A couple of things stood out. They flip farms by buying B-grade farms and then improve and then turn them into A-grade farms. Again, they're getting farms that need a little love, need a little bit of money, get the thing back on track. Or maybe a guy got on the farm, he had no idea what he was doing, and now he needs a little help. These guys are going to help him out. So they amp everything up. And then B, a participation rent, where they get extra rent if the crop earnings are doing well. So they also do that. If the crop does well, they're going to make more money. They're going to take another percent out. With the current focus on healthy foods and veganism trend, this seems to be the sweet spot for a REIT. After all, you cannot yet make fruits, vegetables, and nuts in a factory. I think you actually can, but I don't think too many people want them. Another person said, I only wish there were more farmland REITs to buy. This company, Gladstone, is going to do very well. As inflation takes hold and commodity prices increase, Gladstone's business rent model is king. Totally agree. I love this one. Where is the stock at? Where's the stock at? Well, it's sitting at like 15 bucks. This one's had some decent volatility to it. A lot of people don't like volatility. I like it. But, regardless, they did have some backswings, but everything is looking rock solid. The financials, everything looks great to me, at least. In March, they went down to 10. Then they went all the way up to about 17. And now they're currently sitting at the bottom of a bull flag. If y'all want to draw that in yourself, you can. This is totally zoomed out. But they're basically sitting right at the bottom of a bull flag, getting ready to break north, most likely. And so it looks like a good place to enter, I think. They missed actually their last earnings, I believe. I've looked up a lot of these the past couple days. I might be wrong here, but I think they missed their earnings by like hardly anything. It was like by like a penny-ish or something per share. But they're looking like they're optimistic for the next quarter coming up too. I mean, obviously all these guys are doing really good right now, but regardless, people are even if the earnings have been coming out lately and they're good, stocks are still plummeting because people are basically trying to ride this wave up. And like the day before the day of earnings, then people just cut out because they're just like, okay, we rode the wave, we're out, we didn't care about this company. So it could be a lot of that too. I don't think people really sold off because the earnings were down just a tiny little nothing. I think we're totally good on this. And plus they've been spending, as you can see, buying more and more properties. So I like that play. Seems to me we've got enough in for today. I'm actually going to end up turning this one into a two-parter. Reason being, I just don't want to get too long. I think you guys would rather this broke up into a couple videos anyway. That way we can reference them a little better. So I'm going to go ahead and cut this right now. If you have any other farmer plays or anything that you guys are in that I'm totally missing, just let me know. Look out for the second video. I'll try to get it done here within the next week, but we're going to cut this one for now. And if you all haven't subscribed, please do it. Definitely helps out the channel. If you enjoyed this video, please give it a thumbs up and or even better, share it with your friends on any other platform y'all might be on. Y'all have a good day. Take care.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.